Hello, in this presentation we will be taking a look at a problem that will be very similar to the homework and or assignment. The numbers will change, the format will remain much the same. We're going to be putting the numbers into this Excel worksheet here. This Excel worksheet can be used for both this example as well as the homework and or assignment problem. So we have the following information available to reconcile Severino Company's book balance of cash with its bank statement cash balance as of December 31st, 2015. So what we're going to do is a bank reconciliation in this assignment, and when we do a bank reconciliation we usually have the bank statement and then we have of course our books, and we're going to tick and tie out every transaction. This type of problem is actually just going to tell us the differences. So in real life of course we would have the two things lined up and we would be finding what is not the same by basically checking off every line item on both the bank statement and our books. Then we would find what is different and we would make the adjustment to that. If it's our books that are different than the bank statement, then oftentimes we'll make the adjustments on our side for things like if we bought checks, if we had bank service charges, if we bought something on an electronic transfer that was not recorded in our books, we're going to have to record those. If there's an error on the bank side, then we'll have to notify the bank and have them change it. Of course, again, there's less often to be an error on the bank side, usually an error on our side. That's usually actually why we reconcile the account, not so much to double check the bank all the time, but to solve any problems that we have on our end is usually the reason for that. The difference that will remain at the end of this will be generally timing differences, meaning outstanding checks that have not yet cleared, outstanding deposits that have not cleared. Alright, so now I've pulled this over on this side. We have our Excel sheet on this side, and let's take a look at letter A. The December 31st cash balance account to accounting records is $32,878.30, and the bank statement cash balance is $46,822.40. So we're going to have the bank balance here, and I'm going to put just the book balance here, which is the $46,822.4, and we're going to put the book balance over here, which is the $32,878.3, and that's where that information is going to go. Once we do that, I'm going to make this large. So I'm always going to try to give you a trial balance to kind of keep this in context, and you can see there that here is our books. Our books show as of this point in time $32,878, the book balance, and that does not reflect as of the same date in time the amount on the bank statement. We know that they're not going to be the same because of timing differences, but we want to make sure to tie out every other item in there so that we know exactly what those timing differences are. And if we do that, then we are double checking all our numbers to the bank account. So I'm going to take, and that helps us to stop creating errors. That's a double check against creating errors. So I'm going to take this, I'm left clicking, I'm going to drag it over here until it snaps, like so, and we are now on B, which says check number 1273 for $4,589.30 and check number 1282 for $400, both written and entered in accounting records in December, are not among the canceled checks. Two checks, number 1231 for $2,289 and 1242 for $410.40, were outstanding on the most recent November 30th reconciliation. Check number 1231 is listed with the December canceled check. Check number 1242 is not. So what that means is when we went through our books, basically these are checks that have not cleared. They're still outstanding. So over here on the bank side, we're going to say that the bank is wrong in this case. They're not wrong in that they made an error. We're going to say that they're wrong in that it's a timing difference. So these checks have not yet cleared. So if that's the balance we have here and the outstanding checks that we have written are not included in our bank balance there, then we know that we need to reduce this bank balance number. So I'm going to go under the deduct item here, and we're going to say these are outstanding checks. And I'm going to put a colon, and I'm just going to list the checks that are outstanding. So number 1242 is outstanding, and I'm going to make it a negative, so we could just say negative 410.4, and then I'm going to say check number 1273 is outstanding. I'm going to say it's a negative 4589.3, negative 4589.3, and then check number 400 is out. Check number 1282 is outstanding for negative 400. Then what we're going to do as of this point in time, then this minus these is going to be our outstanding balance, and we're trying to get to where we're reconciling to our cash balance on our books. So this is the bank balance. I'm going to do that by summing this up. I'm going to sum up the entire row. There's a blank cell here, but anything we add in here, if it's a negative number, it's going to decrease the amount, and if it's a positive number, it's going to increase the amount. So I'm going to add the balance all the way down, then enter, and so we've got this minus these gives us a balance of 41,422. If I make this large, we're not to this balance, of course, yet, so that's not the only difference we have, so we will continue on the next item. So C says, when the December checks are compared with entries in the accounting records, it is found that check number 1267 had been correctly drawn for $3,456 to pay the office supplies, but was erroneously entered in the account records as 3465. So we transposed the last two numbers. So what is happening here is if we're comparing our books, going down our books, comparing them to the bank statement, and we're seeing that the check number is the same, but in our records we have a different number that's in the bank account. That's unlikely to happen if we actually print the checks from our accounting software. But if we, for example, enter the checks in the accounting software through the data entry and then actually manually write the check, it's very possible that what we enter into our system could have a data entry error as compared to what we wrote on the check by hand. So if that's the case, then of course the bank is right, because that's what actually came out of the bank in this case. So we're going to have to make an adjustment for that in our books. Now we can't go back in most software and rewrite the check. I mean, some software you could, like QuickBooks, you can go back in there and you can just say, oh, I'm just going to change that check and rewrite it. A lot of software, in order to have an audit trail, won't allow you to do that. So then we would have to do it with a journal entry. So we're going to go on the book side here, and we're going to say that there was an error. I'm just going to call it an error, and we're going to have to, in this case, add another $9 because of that difference in error. Now, again, in real life, I'm going to make this large. We're going to come up to the same balance down here. I'm going to sum this up over here equals the sum, and say it's this plus that error, and once again we're trying to reconcile these two amounts. Now in real life, of course, if there's an error on our side, we may not do this side of the reconciliation. We may just fix it as we go. So we're going to have to fix it. That means that this number here in our books is going to have to change. It's going to have to go up by $9. So we might just go, okay, I'm just going to fix it as we go, meaning this is a debit balance. I need to make it go up, so I'm going to do the same thing to it, which is another debit. I'm going to right click, I'm going to paste it, 1, 2, 3 right there. I'm going to say that's going to go up $9. I'm going to have to credit something $9, and it was for office supplies. So that means the other side of it must be going to office, and we actually are expensing in this example office supplies. So it's an office supplies expense rather than putting it on an asset and then expensing it. So I'm going to right click, I'm going to copy that, I'm going to paste it 1, 2, 3 right there, and then we can record this. So I'm going to say, okay, I'm going to put my cursor in N5 equals the debit to cash, which is going to make this amount go up, puts us out of balance. Then we'll post the other side here to supplies, office supplies in N13 equals the credit. And that makes this go down. And again, this example, if we had some numbers in office supplies, we would have overstated it. Now we're bringing it back down in this case. And there could be a timing issue in this instance as well, because we could have bought the supplies and now we're making the adjustment afterwards. We're going to assume it's not material. $9 not material, not a problem. But our main goal right now is to get the bank balance back in balance. We can see that this number now matches this number. And we're going to try to get it to match this number at the end of the day. I'm going to left click here, going to drag it, move it to the right, and move to the next item. Item D says 2 debit memoranda are enclosed with the statement and are unrecorded at the time of the reconciliation. 1 debit memorandum for $762.5 and dealt with an NSF, not sufficient funds, check for $745 received from a customer in payment on its account. So, and then they assessed a $17.50 fee for processing it. Okay, so what happened here? We're looking at our bank statement and we see this amount that is reducing our bank statement. So we see a deposit, and then we see that there's this amount at the bottom in the deductions area reducing our balance. We're like, well, I don't see that on my books. What is this doing here? And we look at it and we say it says not sufficient funds, and we don't like to see that because that basically means one of our checks from our customers has bounced, basically. And when that happens, of course, what will happen is they'll record it as a deduction to our checking account, and they'll ding us with a penalty for the paperwork on the not sufficient funds for that. So that means that that's kind of like an error on our side again, of course, because we're not going to be able to go to the bank and say, well, could you fix that? We're going to have to adjust our books and reduce it for the fact that there was a check that didn't have